$3,250. That's how much my portfolio got wiped out in price appreciation in the last week of February. So welcome back everyone, and today I'm doing the February 2020 update on my dividend growth investing portfolio. I'm going to go over the recap for the month, share with you the good, the bad, the things I purchased, what I sold, and the dividends that came in. So at the end of the month, at the market close on February 28th, 2020, the last trading day in the month of February, my portfolio sits at a value of $33,686. As everyone knows, the last week of February, we've had a slight correction in the market. And by slight, we've seen about a 12% drop in the S&P 500 and the Dow in a 5-day span, which is actually the most severe drop since 2008, about 12 years ago. So this was my first time seeing a market correction. I've had this portfolio for about 4 months, and I've been consistently investing each and every month. And because we've been in a bull market for the last about 11 years, every time I bought a holding, I've seen it go up. I would make a purchase, I'd see the price right away within the next week or two go up in value, I'd collect the dividends, and I only saw green throughout my entire portfolio. Now, as you can see here, over this last week where we saw a strong drop in the market, my portfolio suffered just as well. In one day, the last trading day of February, Friday, February 28th, 2020, my portfolio saw a drop of almost $1,000 in one single day. My portfolio lost 2.88% or $995 in one single day. That is my largest single day drop in the entire life of this portfolio. Although it's only been a short life of 4 months, it was actually crazy to see how fast the market could drop and how fast my portfolio could lose value. For me, I actually haven't sold any of my positions yet, so these are all paper losses. I haven't actually realized any losses because I haven't sold anything yet. But as you can see here on the right, my total portfolio is now down 3%. My overall portfolio has lost 3% of value, which is equivalent to $1,030. That may not sound like a lot, but for me, at the beginning of the last week of February, before markets opened on Monday, my portfolio was sitting at a gain at around $2,100. Then, 5 trading days later at the end of the week, I'm sitting at an overall loss of $1,000. My portfolio lost around $9,000 plus in value within 5 trading days. For me, only ever seeing green, this was my first awakening and my first actual visualization of corrections in the stock market. Am I worried or stressed out? No. I'm not going to panic sell. I'm not going to change any of my core holdings in this portfolio. I'm going to use this dip as a buying opportunity to purchase more shares within the market. But for me, I just really want to document, share this with everyone, and share it from my own personal knowledge so that I can look back and show how even though I suffered a small 9-10% dip in my portfolio, over the long term into the future, it recovers and I will be very successful if I hold strong dividend paying companies with a long-term perspective, reinvest the dividends, hold, and live for the long time. So for me, that's what I plan and that's why I document like this. As you can see, if I scroll down, all my holdings as from Friday, this represents how they performed on Friday, are all in the red. So for the last Friday of February and the last trading day within February 2020, every single one of my holdings was in the red. If I scroll over, right here you can see the total performance of each holding. So as you see here, VDY is my high dividend yield ETF. And in my last episode of this, VDY was sitting at a total change. I was in the green. I was up around $1,500 total change from VDY alone. Now I currently sit in the red, $365. That just shows you how fast price appreciation and how fast market prices can change and you can lose value of the shares. That's why my sole focus is not on growth of shares and growth stocks, because for me, I could not imagine losing a whole year, which is what 8 to 9% represents in my investing journey, is about 1 year of growth, all get wiped out within a matter of days. For me, although the price of these shares has decreased and I am now in the red, my dividends continue to come in, and I actually saw dividend raises in the last week of February that actually boosted my dividend income even though the market was dropping. So that's why I like my strategy. It gives you that peace of mind knowing that I'm still going to have that solid 3 to 4% portfolio dividend yield coming in even though the market is going down faster and faster each day. So if I just show you some key points in this portfolio here, TD, one of my large holdings, down over 10% in that holding alone. BMO, another large Canadian bank, down 10% in that alone. Royal Bank right here, Royal Bank of Canada, ticker symbol RY on both the Toronto and New York stock exchanges, is my largest individual stock holding with a market value of $4,491, and on that alone, I am down 7%. My second largest individual stock holding is TELUS, currently sitting at a market value of $3,000, and I'm down 6% on that stock alone. So as you see here, I have a lot of stocks who are in the red, and in the red, but not by like 1 or 2%, by a significant amount. 8%, 7, 10, 9, 9, 7, 6, 7. I have significant losses on a lot of these holdings. Am I too worried about it? Not really. Am I going to continue to hold long term? Absolutely. So if I pull up the chart of the S&P 500, as you can see here, this is the 1 month chart. So this is the month of February, from Monday, February 3rd to Friday, February 28th. If you look at here, the peak, the highest point in February 2020, and I show you the change to the end of the month, the S&P 500 lost 12.76% from the highest point to the lowest point in the month of February. That's almost a 13% drop in the S&P 500 total value within about 5 days. And that is what led to the strong drops in my personal portfolio as well. The Toronto Stock Exchange, because it has a lot of cross-listed stocks that are listed on both the Toronto and American stock exchanges, heavily moves in the same direction as the S&P 500. It may not move to the same extent, but it does move in similar directions most of the time. So for me, because many of my holdings are traded primarily on the Toronto Stock Exchange, my portfolio suffered a loss just as well as the S&P 500. The Dow Jones suffered a very similar loss to the S&P, losing about 12 to 13% in value over the same amount of time. Now I'm just going to move on to my dividend tracking spreadsheet here that I created on Google Sheets. As you can see, it just separates each of my holdings by sectors, and it shows you the amount of shares I own, the price of the shares, my book value, and my overall gain or loss per holding. Same thing as you saw in Yahoo Finance, a lot of red. Almost all my holdings are in the red, which is fine for right now because I know they will recover over the long term. If I scroll over to show you my other sectors, you see a lot of the same things. A lot of red in the total gain or loss column. But if you scroll up, my utilities are actually holding pretty steady. Still in the green, bunch of solid holdings that were up a lot. For example, AQN, Algonquin Power and Utilities, is a utility company that was actually up over 25% on this stock alone. So even though the correction has hurt the price appreciation, I'm still overall up because I was up such a high amount that 10% drop still leaves me up at a high amount for that individual holding. If I scroll down and show you my diversification between the sectors, as you can see here, VDY, my large high dividend yield ETF, represents 41% of my overall portfolio. So I am not too worried about having such a large amount of my money in that ETF, in that one part of my portfolio, because that ETF is actually diversified into many different sectors as well. So although it looks like such a large chunk, this chunk is actually subdivided into different sectors within the ETF as well. So overall, a very diversified portfolio across a bunch of different sectors. Next, my next goal is to get this portfolio diversified into different markets. I'm going to be expanding to the US market as well as a little bit of international market exposure. And I'm also going to throw a little bit of money into a bond ETF. And I'm going to use that money just as extra holdings. What I'm going to do is, instead of just holding cash in this portfolio, I'm going to hold them in bond ETFs so I can earn that little bit of monthly interest each and every month where I'm not buying. I won't be purchasing any bonds right now because we are on a dip, and I'm looking to use that capital to buy these strong dividend paying companies because they are on sale. But moving forward in the near future, maybe 1 year out, 2 years out, I'm going to start using the bond ETFs just as a holder of cash. And then if we see large dips, I will be selling the bonds in order to purchase those strong dividend paying companies. If I move over here, this is a chart on my overall portfolio value. And as you can see here, my portfolio continues to rise over the first 2 months of the year. I document my portfolio value on the first day of each month, and then I show you how it's performed month to month. So I started the year 2020, January 1st, with a portfolio value of $29,267. Then moving on to February, my portfolio grew to $31,319. And by the end of February, March 1st, my portfolio had a value of $33,694. So this growth is not only price appreciation and dividends. I do continue to contribute to my portfolio each and every month. And I just wanted to explain the growth in my portfolio through the month of February. In the month of February, I contributed $4,300 into this portfolio. I made 3 separate purchases with that money, but as you can see here, my portfolio only grew by about $2,000 from $31,300 to $33,700. So about $2,400 in growth, yet I contributed $4,300. And why it's such a small difference between how much I contributed and how much the actual portfolio grew was because, as you could see, my price appreciation of my shares got wiped out within the last week of February. So I'm actually negative on the month, but my portfolio actually grew because I continue to contribute each and every month. Of that $4,300 I contributed I made 3 purchases. I purchased $1,000 of Suncor Energy. I purchased $1,000 of VRE, the Vanguard REIT ETF. I actually have no holdings in the real estate sector before that purchase. So that purchase allowed me to enter into that sector and begin holding a nice low-cost ETF with a nice monthly dividend and allow that to grow over time. And then my last purchase, I put $2,300 and I purchased TELUS shares. TELUS took a small dip earlier in the month and I want to buy in that opportunity. So I put $2,300 into TELUS before the larger dip that happened at the end of the month. In the beginning of March, I plan to use some capital to buy all these shares, a couple more shares of these solid companies while the market is still down. But overall, my portfolio still performed okay through the month. I'm not too worried about this short-term correction. In a year from now, in 2 years from now, when the market recovers, we see prices growing up again, we see my shares appreciating in value and those dividends coming in, I will actually forget about this time and I won't be too worried about it. So there's no point in me stressing about it now. I'm not panic selling. I'm not changing my portfolio in any way. I'm going to continue to buy, continue to hold, and continue to look at my long-term perspective. This portfolio is meant to be grown over the next 20 to 30 years, and that's exactly what's going to happen, and I don't plan on changing up anytime soon. So as always, this was just my February recap of my portfolio. I really enjoy you tuning in. Every single month, I'm going to track my portfolio, share with you the buys and sells in order to keep track not only for myself, but to share the good, the bad, the ugly with this portfolio and really teach and educate people on how to build a portfolio, what to do, how to survive the good times and the bad. And as always, if you like the video, hit that button. If you want to subscribe, please feel free to do so. I post videos every Monday and Thursday on this channel. I'm the Gen Z investor. So as always, see you next time.